Okay, fam, welcome back. So today we're going to be going over uh, mainly just the markets today. This is going to be kind of a generalized video. We're not going to go too deep into the grayscale trust. So with that being said, let's get it. Okay, so the first bit of news that I wanted to cover here was the PCE data, which I believe came out yesterday. Again, I've been very, very busy lately, so have not had a chance to keep perfectly up to date with everything with you guys on this, but we're going to cover it as it comes. So you guys can see that the PCE data did indeed come out yesterday. It came in a little bit hotter than expected. Well, basically it came in at expectations, but hotter than the prior month. On the month over month, year over year was the same, so no reduction in that. And then, of course, you had a bunch of Fed members coming out to annoy us again, as they always do. So, and then you had PCE price index, also an increase month over month, and a slight increase, but at expectations year over year. So the rest of the stuff, I wouldn't have been too worried about the rest of the stuff. So I don't think any of the other news there is relevant. But as you guys can see, the market did pull back yet again. We did buy some more dividend paying stocks, so we'll talk about that tomorrow. But yeah, the NASDAQ went from being at highs to pushing down another 2%. So it's quite obnoxious. But I mean, look, the reality is the whole, inflation's a real thing in 2025. Apparently the markets believe it. So I've stated my opinion on this. I think it's pretty clear that the Fed just simply needs to cut the rates and let Trump take care of the rest on the back end, and life will be good. It's really that simple. I mean, I heard this old saying a long time ago that you can lead a horse to water, but you can't make it drink. I think that's the case here. So I think the Fed is trying to overplay their hand, and I think they really don't know what they're doing at this point. To be honest, the Fed is actually losing credibility in my eyes, which is not good as far as they're concerned. So in terms of the grayscale trust, I'm not going to go too deep into it. You guys got the levels. You can take a look at the previous video if you want to kind of get an update and compare the current prices to the previous prices. I think what's a little bit more important is taking a look at the macro today. So in terms of the NASDAQ here, so we do have, we got a break of this channel. Again, we're creating higher lows here. You can see them. They're not perfect, but we got to get above this 22,000 to continue the bull trend, which may end up happening next week. Trump came out recently and said something about signing an executive order ensuring deregulation of business starting, I think it was supposed to go into effect sometime towards the end of this month, and there is supposed to also be tariffs effective today. By the time you guys see this video on the 1st of February, going into effect today, I think it was 25% tariffs on Canada and Mexico and 10% tariffs on China. And all I have to say about that is good. If these countries want to do business with the United States, they should be willing to pay to play, so to speak. And if they're not willing to do that for the benefit of Americans in the U.S. economy and bringing manufacturing from overshores back into the United States, which is what's likely going to happen because nobody wants to pay extra money to do business, it would obviously be easier just to bring businesses back here with deregulation and not having to deal with tariffs, right? It's kind of an incentive to do that. But in my opinion, if they're not willing to pay to play, then they shouldn't be allowed to do business in the United States. Really that simple. There should be no reason why the United States should rely on anyone else in the world for commodities, goods, or services unless they absolutely have to. Because, I mean, look, the reality is, there's a double standard going on here. The United States is giving these people the upper hand at the expense of their own citizens. But the reality is these other countries around the world would not do the same for us. Okay. So let's be real about that. All right. So we'll go over the SPX, or not the SPX, but the S&P 500 real quick. So very similar. You can see this huge descending. Well, I suppose this is probably actually a channel too. So yeah, this huge descending channel here. Again, the target for the channel is the top of the channel, which we pretty much already hit, 61.50, but then we got rejected. Of course, there's probably some bears sitting up there waiting to short the market. Makes sense. Usually a level doesn't get broken unless it gets tested multiple times. So yeah, they probably thought second attempt, yeah, we're just going to short this effer and make bank, and that's what they did. So, but what I want to point out is that we did get a break of the channel here as well, and we're also creating a series of higher higher lows, and we just need to get above that 6150 to break to new all-time highs, and I do think that's coming soon. So, in terms of Bitcoin, it was pushing towards all-time highs, and then we got that, Trump coming out with the tariffs and all this other stuff, and the Fed. Well, we had the FOMC meeting, and the Fed was basically like, "Yeah, we're not going to cut." And then, you had the PCE data come in a little bit higher than expected, so naturally, Bitcoin was going to get a pullback. I've told you guys that Bitcoin has a strong correlation with the dollar and with the Fed funds rate. So, look, I think what it comes down to is this: that at the end of the day, until we start getting major rate cuts, and again, the next FOMC meeting is not until March 19th, there is no expectation of a rate cut here, essentially a very small expectation of 25 basis points. Looks like we're not even getting an expectation of any rate cut until June. I think that's a bit ridiculous, but we'll just have to wait and see. But until the rate cuts come in, people are not going to want to be incentivized to put trillions and trillions of dollars into risk on assets. So I think Trump is trying to get that fixed in the back end. But the dollar and the Fed funds rate has to come down for crypto to really start moonshotting. So until that happens, it's hard to say exactly what to expect, but I suspect that that's what's causing the manipulation that is not allowing these crypto prices to rocket. It really all comes down to the Fed and their stupid Fed funds rate. And they're, it's inflation. It's this, it's that. It's always some. Look, you guys may not realize this, okay? But a vast majority, and this is just my opinion, but a vast majority of the Fed members are actually Democratic, okay? Again, it all comes back to a political play, okay? These guys, they're the vast majority of who they if I'm not mistaken, who they donated to was actually Democrats. So, as you guys know, the Democrats were witch hunting the crypto space for 4 years. That's a problem. I think the solution here is that Trump should find a way to fire Powell and get rid of his Fed members and create a whole new Fed cabinet that will actually do what Congress wants them and what the president wants them to do. So, I think that's the issue here that needs to be resolved. There's one of two ways that you could play this. You could either buy into the fear of like, we're never going to get a rate cut, and you could just keep buying into it and run the risk of maybe the assets in crypto going down in the immediate short term, and then in the mid to long term, they'll probably go up again. Again, according to the timeline, the crypto bear market is not supposed to take place until right around the end of this year, so we have some time. Or if you're concerned about asset prices going down in crypto, you could always just say, well, screw that. I don't want to touch crypto until the Fed cuts rates. And you could just go with something like dividend paying stocks and growth stocks with options premiums like the Mag 7 or something like that. Like, for example, we're taking position trades on some of these smaller caps like EVgo and CLSK. CLSK is different because, they got earnings coming up. It is an actual stock, even though it's related to Bitcoin like MicroStrategy. So it's a bit different than native crypto and the Grayscale trusts. But just some food for thought, if you're worried about the Fed's not going to cut rates and inflation is a real thing, then maybe passive income investments could be a better option, a little bit more safer to kind of hedge against the possibility of just the Fed trying to screw with the markets consistently. Again, it is, look, I don't know if you guys noticed this, okay, but the Fed cut rates around September, and they were cutting right around towards the end of the year. And look what happened with crypto, okay? So as they were cutting rates, the markets took off like a rocket ship to the upside. As soon as they said they were going to stop cutting rates, what happened? We went sideways, okay? So it's very much, there's a strong correlation here between Bitcoin and, like I said, the Fed funds rate. There's also a strong correlation between Bitcoin and the US dollar and the yields, okay? If the markets believe that the reinflation or reigniting of inflation is a real story, then the bond yields will skyrocket, and that's actually bearish for Bitcoin. Okay, So we want to see the bond yields fall, and we also want to see the dollar fall. But in order for the dollar to fall, inflation has to be dead, and the DXY has to go down. And you guys can see it's still sitting right around 108 to 110. So until we get that, Bitcoin could probably still go sideways, maybe even down. I don't know. I'm not willing to say it's going to go down at this point because, again, it just does appear that we are just simply chopping sideways. It's a pullback in time. I mean, realistically, at this point, the price of Bitcoin could easily, based on technicals, go to the upside because, I mean, again, we saw something very similar back here. It just kind of went sideways, down into the EMAs, and then all of a sudden took off like a rocket. We could see something very similar right here because, again, this is basically just going sideways into the EMAs. And I told you guys already, usually when this happens, it kind of goes sideways and then rips to the upside based on technicals, so long as the price is above the EMA. So that's what we're looking at right now. Okay, so anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.